Hey, good morning, everybody. Today is Friday, March 18th, 2016. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Just a quick note before we get started. I'll be away this weekend and won't be doing a video market review or a newsletter this weekend. That noted, much of what we do at Push Button Stock Trading is based in part or in full on William O'Neill's classic book, How to Make Money in Stocks. O'Neill utilizes the acronym CANSLIM to identify the important elements of what he's looking for in a trade. The A in CANSLIM stands for annual earnings and reminds us that we should be looking for stocks that have an average of at least 25% annual earnings growth over the past 3 to 5 years. The L in the CANSLIM acronym stands for leader or laggard. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors, Spectrum Analyzer, to identify market leadership on a daily basis. So let's get started with that. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 8 came from the real estate investment trust industry. 6 came from basic and diversified chemicals. 5 came from containers and packaging. 5 came from commercial vehicles. And rounding out the top 5, we had logistics services. Recently, we've seen a lot of real estate investment trusts. That might be a good place to look for leadership in this market. Just kind of a side note. Basic chemicals and containers and packaging, and probably commercial vehicles and logistics services, are all leading indicators in the economy. It's interesting to see those industry groups in the leading industry groups, and that may be a harbinger of a better economy to come. That noted, let's start today by taking a look at the Russell 2000. Recently, we've been watching this consolidation area in the Russell 2000. We want to see the Russell decisively take out resistance at the 1079 area. Yesterday was a good day for the Russell. We recaptured that area of resistance and closed right near the top of the trading range for the day. If the Russell is to have another good day today, I would think that that would be fairly bullish for the long term. Next significant area of resistance for the Russell is probably right around here at the 200-day moving average. See what the NASDAQ Composite's up to. But before we do that, the M in the CANSLIM acronym stands for market. And to my way of thinking, that's the most important element. So let's take a brief look at the market here. Stocks shook off early losses again yesterday to close near their highs for the day. The Russell 2000, as we just noted, is topping resistance, but the S&P 500 and the NASDAQ are balking at their resistance levels. Trading volume, like Wednesday, was well below average, but higher than the prior day, giving us an unconvincing accumulation day. An accumulation day is a day when the market advances on heavier trading volume than the prior day, and is considered a sign of institutional buying in the market. It's that institutional buying that the CANSLIM system is trying to identify and capitalize on. Our market timing model remains on a buy signal. A buy signal indicates that both aggressive and conservative traders can buy, but we shouldn't be increasing margin at this point. We still have only 28 stocks on our universal watch list. That's an unusually low number. In a healthy market, we generally have between 50 and 90 stocks on the universal watch list. What the sparse universal watch list seems to be telling us is that while the market continues to look more healthy, leadership is coming from beaten down sectors rather than the stocks with the type of fundamental and technical criteria we normally look for. That noted, we remain cautiously bullish on the market. If the market remains healthy, the number of stocks in our universal watch list will continue to climb. For the second day in a row, advancing issues topped decliners by nearly 4 to 1. The New York Stock Exchange advanced decline line looks bullish. New highs continue to outperform new lows. Our overbought oversold indicator is back to an extremely overbought condition in the market. Keep in mind, an extremely overbought market can become severely overbought. According to our Ramosi ratio, large capitalization stocks continue to better small yesterday and continue to outperform on a 10-day moving average basis. Small caps typically outperform in a bull market. The market's decidedly more bullish than bearish, but we remain quite overbought. I'm concerned that the market may need to consolidate gains pretty soon. Traders may want to take advantage of any weakness that develops to add to or tweak their portfolios. That noted, be careful, and as always, keep your stops in place. Okay, the NASDAQ Composite yesterday was up 11.01 points, or 0.23%. We closed at 47.74, and notice how we again balked at this trend line. This trend line is proving to be very stubborn. This trend line goes all the way back to the beginning of the bull market back in 2009. Yesterday, trading volume was below normal, but was above the prior day, giving us another accumulation day. For you followers of William O'Neill, we are in a confirmed uptrend in the market. We have been since February 18th. We are showing 4 distribution days in the NASDAQ since the follow-through day on February 18th. IBD, the Investor's Business Daily, is showing 5 distribution days. 5 distribution days is a lot of distribution in a 1-month period. But note that these 2 distribution days will be falling off of the count fairly soon. Right now, the NASDAQ is bracketed by support down here in the 4506 area, which hopefully we won't retest, and resistance at its long-term trend line. If we were to break above that long-term trend line, the next area of resistance would probably be the 200-day moving average, which we show in black right here. And if we were to better that, we have resistance up here, fairly formidable resistance up here in the 4900 area. Let's see what the S&P 500's up to. The S&P yesterday was up 13.37 points, or 0.66%. We closed at 2040, and notice how we balked again at resistance here in the 2044 area. Yesterday, trading volume was below normal, but heavier than the prior day, giving us a weak accumulation day. The S&P 500 is currently in a confirmed uptrend in the market and has been since February 18th. Unlike the NASDAQ, which seems to be accumulating distribution days, the S&P only has 1 distribution day since confirmation of the uptrend. Right now, the S&P is bracketed by support down here in the 1993 area. Probably will pick up support at its 200-day moving average as well. But we have resistance here in the 2044 range. If we were able to take that out, next area of resistance is going to be the old high in the market, which is at 2134. According to our market timing model, we are on a buy signal. Buy signal indicates that both aggressive and conservative traders can buy. We shouldn't be looking to increase margin at this point. Let's take a look at some stocks that we may be interested in watching. But before we do, just a note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list. To qualify for our universal watch list, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria and continue to satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are generally only about 50 to 90 stocks that meet these strict criteria and make our universal watch list. These are the only stocks we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted, there are 3 stocks that I want to take a quick look at. First is Broadcom Limited. Broadcom is a Singaporean designer of analog integrated circuits for the telecom, industrial, automotive, and computing markets. We've been watching Broadcom for a while now. If you recall, about a month or so ago, We broke out of this double bottom base with a pivot point in the 138.69 area. At that point, Broadcom wasn't on our universal watch list. Since then, it has become the newest addition to our universal watch list. Generally, we don't recommend stocks that aren't on our universal watch list, but at the time we said that we might be interested in Broadcom because of this gap out of the double bottom base, and I expected that it would eventually meet the criteria for our universal watch list. So we had an opportunity to get into Broadcom at the 138.69 area. If you weren't able to get into it then on double bottom base, we have a consolidation base that we broke out of yesterday. The fly in the ointment is trading volume yesterday was below average. We generally on a breakout want to see at least 140% of average daily volume. But if we look closely at this, we see that trading volume was higher than any down day in the past 10 trading sessions. That gives us a pocket pivot and gives us an excuse to buy Broadcom at this level. Next, let's take a look at Installed Building Products. Installed Building Products provides new residential installation services, say that 3 times fast, with over 100 locations servicing customers in 48 states. We talked about Installed Building Products yesterday, noting that there's a lot going on with this chart. Let's take a look at this. Installed Building Products has been working on this double bottom base with a pivot point in the $25.70 area. It also has this trend line. Yesterday, the stock gapped above that trend line, giving us an opportunity to get an early entry into the stock. Then it closed above the pivot point of 25.70. Trading volume yesterday was huge, well above the 140% of average daily volume that we're looking for. Installed Building Products gets an 80% checklist rating. That's up from 72 yesterday. We're in a first stage consolidation base with a pivot point of 29.87, but Installed Building Products can be bought off of this double bottom base for an early entry in the 25.70 area. Last stock I want to take a look at is Mobileye. Mobileye is an Israeli-based developer of software and related technologies for camera-based advanced driver assistance systems. Mobileye is going to be integral in self-driving cars. They're also integral in self-braking cars. Mobileye is not in a recognized basing pattern at this point, but Mobileye is on a fundamental basis one of my favorite stocks. It gets a 68% checklist rating right now, although it's been in this downtrend for well over 6 months. Notice how we broke above this trend line, and yesterday we traded higher trading volume than any down day in the past 10 trading sessions, which is our definition of a pocket pivot. That's back-to-back pocket pivots on the break above resistance at the trend line. Mobileye is not a stock that we would normally recommend. It is on our universal watch list. Technically, I'd like to see it base for 5 to 7 weeks. It seems to have no intention of basing here and may be a good place for very aggressive traders to put some money at this point. If you do buy Mobileye, keep your stops in place and don't let the stock reverse on you. Again, I'm going to be away this weekend and we won't have a video market review on Monday. I will see you again on Tuesday. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs, Incorporated believes to be accurate. Ohanneson Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.